Let's take a look at some charts on Link from this week's article on Brave New Coin. So Link is an Oracle network. It's an interoperability network. It's an attempt to get consensus through information on the blockchain. The most obvious example is price oracles, price oracles, where you have 21 different sources for a certain price. They all report to the oracle, and then that oracle price can be used throughout the ecosystem for DeFi, for indices, for all sorts of stuff. It's a way to strengthen the data, make the data more robust, make the data less reliable on any one entity. Just one example. You can see all these companies that Link has either partnered with or has oracles with or has data sharing with. Thus far, the oracle game has been strong for Link, and many companies, especially DeFi, have become more and more reliable on Link. What I don't understand is how that translates into price. So it's a bit odd to me. There's a bit of a disconnect from the fundamentals as far as having a Link for Oracle purposes, or having Link for Oracle purposes, the token, and having the Link network for Oracle purposes. Nevertheless, it's done really well. Looking at these nodes and these transaction counts, these are all the nodes reporting data or looking to receive data from the network. And it's just continued to grow since May last year. And not only has it grown, but it's been sustained. So any of these nodes have continued to get these smart contract transactions for over a year now. So there's clearly a reliance on Link, or a need for Link for this data. So it's found its use case. If we look at the token supply, this is always a point of contention for me, because with any project you always want to see how many tokens are available. Is it vested? Are the tokens vested? Are the tokens locked up? What are the plans for 60+% of the quote unquote unlocked tokens, the remaining circulating supply? You know, there's all sorts of ways you can massage this, because you don't really want to consider these as circulating, because then that inflates the market cap. And then you get into the market cap conversation where maybe market cap is a useless metric, which at the end of the day it kind of is, because you have all these pre-mines here just sitting, essentially waiting to be sold, right? Again, I don't know what node operator rewards is. I don't know what the plans are for that. I've tried to look. I've tried to ask people. I just don't know. Thus far, over the past few months, Smart Contract Limited, which is the holding company or parent company for Link, or Link Development, is selling 500K Link on the market every 2 weeks. And we can see that if we just check the wallet. So there are several wallets you can check. The main wallet that's holding this amount, well, it's like 38 million Link or something. The main wallet holding that amount is moving this amount of coin, every 2 weeks now. So I'm assuming it's being sold. You'd have to track it a little further just to be sure, like if it's going to an exchange or OTC or what have you. But I'm pretty sure it's just 1 million a month, which is fine in the grand scheme of things, especially when price is going up. What you don't want to see is, 5 million in a month, or 5 million moved in a day, 5 million moved in a day. This will definitely damper price. Any bullish rally, it'll hurt that quite a bit. So this is actually preferred if price is going up, because the market can sort of absorb that. In Ripple's case, they have a similar situation, except the market isn't going up, so it's just adding to the selling pressure. It's just continually being dripped into the quote-unquote circulating supply. So from that regard, Link and Ripple are pretty similar. They're both pre-mines. They're both have a pretty big chunk controlled by the company. Ripple, it's like 60%. Smart Contract Limited, it's probably half that. But the effect, the purpose of the cause is the same. The developers are getting paid to work on the chain and what have you, which is fine. But as long as you know that going into it, there's a whale who's just dripping it. So if this ever does go south, it will inevitably aid in the price decline. Again, here's an example of what an oracle looks like. You have all these different nodes from different exchanges or networks, and they're all reporting to the Link oracle, and then that oracle can be used for anything else, interoperability. If we look at transactions per day in the line here and average transaction values in the fill, this is exactly what you'd expect to see from a price chart that's at all-time highs. You expect to see robust on-chain activity, continued increase in transactions per day. Average transaction values are even up because of the price, most likely. I doubt that there's much more being sent. You know, this decline is much different than this stabilization here. Not that it tells you much, but this is definitely bullish from the on-chain perspective. Monthly active addresses in the fill are at an all-time high. Again, you'd expect that if price is at an all-time high. When you see transactions per day near all-time highs and active addresses near all-time highs, and price hasn't moved, to me, that says it's not pricing in all this on-chain activity. If it's economic, real, organic, price should go up, arguably. That's one reason why we use NVT, or some people use NVT, because it is a measure of economic utility against market cap. So if it's falling, that's bullish. If it's rising, that's bearish. Where it is historically is also important. So this is on like the bottom third of the range from 850 to 100. It's on the bottom third of that range. So it's definitely rising. Market is getting a little more expensive, the market cap, but the on-chain activity is keeping pace with that rise. Let's get to technicals. We have the 50, the 200, volume, VPVR, RSI, yearly pivots. So obviously it's at all-time highs, and when a market's pushing all-time highs, really not a great idea to short it unless you're super sure, or even to sell, because anything can happen in price discovery. I mean, I don't hold any link, so let it go to a billion, but realistically, this could just go and go and go and go, It's always better to let some go at each yearly pivot, for example, or at the 161822 fib from the high to low here, whatever the previous range was. That's between 650 and 820. But as far as the top, you don't really know where that's going. Trend-wise, this has been supported since mid-April when we had the bull cross. Then it broke the pivot, then it broke previous all-time highs, and now it's just, free-floating up here. About as bullish as you can get, really. Volume declining up until breaking all-time high, and then we get the volume confirmation. So things you don't want to see are higher highs on declining volume or higher highs on declining RSI. Not the case thus far, but those would be considered bearish divergences, an indicator of weakening bullish momentum. So if you get a bear div into these resistance targets, there's a higher likelihood that this begins to retrace a little bit. Looking at the cloud like this again since mid-April, just like the 5200 cross. It was bullish all the way back here. And then it had these bullish TK recrosses, kind of hard to see, but when the blue line crosses over the red line, very similar to an bullish EMA cross. So you're getting this trend reset, this like low time frame intra-trend reset as it's reaccumulating. And then it's go time, reaccumulating, go time. And so these bullish TK recrosses above the cloud can just keep happening. Ideally, in a real bull trend, that's what you see. You don't see this one and done stuff. You don't see this insane rise. You see continued periods of reaccumulation, and it just keeps marking up. That's what you want to see, really, if you're a trend trader, because that gives you opportunities to re-enter the trade, add to your position, close the trade at highs, that sort of thing. And it's easier and smoother to trade than just a few hours rise. And this is the 12-hour chart, so this isn't even the daily. And this moved extremely quickly earlier this year, January through March. This is the 2-year, technically it's the year MA. So down here is the yearly MA. I just picked 183. 183 days is half a year. And then 5 times that gives you this resistance level. You can think of it as an oscillator. So below the yearly, it's oversold, above it's overbought. And a couple ways you can trade that. You can say once it breaks above the yearly MA, you're buying. That confirms the trend, like it did here. Went below, and then it confirms the trend. You could say I'm just going to keep buying anything below the yearly. I'm going to sell anything above the 5 times the yearly. You can say I'm going to consider selling once it crosses 5 times above the yearly, but then only sell everything once it crosses below. There's all sorts of ways you can play this, but it's projecting 1070 for the upside resistance target. Now, over time, if this is slow, it'll keep rising. You can see even with the dip here, this MA pretty aggressively rose with price here. And then looking at Link BTC, just completely textbook pitchfork trend here. It's held this rate of change for over a year. It's held above the 200 EMA for over a year. Just exactly what you want to see in a trend. You know, it gets these periods of being oversold, retests support, comes back to the middle, retests support, oversold. Right now it's not quite oversold. You know, oversold would basically be at the R2, somewhere around 75,000 sats, something like that. But up here would be the next level of resistance I'd be watching. Again, also in price discovery. Then lastly, looking at Link ETH, it had been forming this sort of rising wedge, this higher highs, higher lows, just getting tighter and tighter and tighter and tighter. It's been about a year now. Typically, these break down. They don't really give a great bias in general, but I generally think they break down. It refused to break the 200. Again, you can see it's just held basically ever since 2018. It's held above the 200. I think once ETH staking comes and there's some FOMO around fundamental changes with the ETH network, this could start to retrace, break the 200, break this pattern, you know, test 012 basically. That's where I'd expect the first support to be, and then figure it out from there. But this has definitely been super strong. The RSI right now is probably at an all-time high, which is not something you want to see if you're super stoked on adding or opening a position up here, a long position. And this is also in price discovery. So all in all, these past 3-4 months have just been really good for Link. On-chain data has supported this. Google Trends has supported this. Price technicals have done a pretty good job at forecasting the bullish trend. And it doesn't look like it wants to reverse anytime soon.